Hello traders and welcome to another video review. Today is Tuesday, 14th of December 2021. We are going to start our review with the Forex calendar. What's interesting today in the Forex calendar? Well, the most important data for today had been released during the London session, and those were climate count change and climate count rate data from the UK together with the average earning index. As you can see, average earning index has beat the expectations, 4.9% versus 4.6%, but it's still worse than 5.9% last time. Climate count rate is going down from 4.3% to 4.2%, which is in line with the expectations. And the climate count change has been released at the level of minus 49,000, which is better than minus 31,000 expected and better than a last time reading of minus 58,000. So pretty good data from the UK during the London session, and that's about it, because during the New York session we got the industrial production data from the Eurozone, and then the NFIB small business index. But the key data during the New York session are PPI and core PPI data from the US, scheduled for release 3:30, and as you can see, PPI is which is producer price index, is expected to decrease from 0.6% to 0.5%. So we will see how this data will affect the markets. And deep in the night, just about the New York session termination, 9 o'clock p.m., Reserve Bank of New Zealand Governor Adrian Orr will give a speech as well. So what we are going to take a look at is I think the US dollar and the British pound. So let's start with the British pound technical analysis. Daily chart of the British pound, as you can see here on this screen, is moving lower inside of this channel. Recently we had a hit of the technical support. This technical support is at the level of 1.3195. Even pound made another low at the level of 1.3160. There was a chance of a bounce, but yesterday we got this big red candle, Marubozu candle, which is not a good indication for bulls at all. And today the market participants, as you can see, doesn't want to go up either. So it looks like right now we are hovering back again 1.3195. The next eventually target for bears is 1.3129, and that means despite the oversold, extremely oversold market conditions, this bearish pressure is still active, and I think we will continue the down move on the British pound towards lower price levels. Only a sustained breakout above 1.3353 and definitely above 1.3605 would change the outlook for more bullish in the near term. Let's take a look at the US dollar index. The US dollar index keeps trading inside of the triangle. This triangle was made after the 5 wave to the upside had been done, and right now we are just testing the upper triangle line, which is as well the upper trend line, or the upper triangle line. However, not a good sign of a breakout here, because let me just zoom in here, because it looks like this up move is being capped around the level of 96.40. The daily time frame candle didn't close yet, so we might expect a different outcome for this candle, but it looks like we are going to close below the open, and that would means this candle will turn red. Red candle means upper channel line or channel upper triangle line had been violated. Despite the fact it looks like a breakout, there's no close above the upper triangle line. That means there is no really a breakout. So maybe this is it, maybe not. It's better to keep an eye on this current situation. Please notice the fact that this is better technical resistance here, 96.61. That's the better technical resistance. Please notice the fact that this is a continuation pattern. However, we might break to the downside and go back into the channel, and that's a very, very bearish sign for the US dollar. If, however, the majority of traders will see this pattern as a pennant, which is a pole of the pennant would be here. There you go. Let's say I'm just driving the pole of the pennant. Yeah, the pole of the pennant would be here, and the pennant itself would be this. So this is a continuation pattern together with the triangle. So that means we might expect way higher prices than they are right now. I think it might be even almost 100. In the nearest future on the US dollar index. So it all depends which way the market will break out of this current pattern, the triangle or a pennant on the US dollar index. Let's take a look at oil. Crude oil futures for the current month look like a typical bounce towards 50% of the Fibonacci retracement. However, this level 73.97 had not been touched yet. We are capped at 73.15, and as you can see, bulls are consolidating into this range 73.15, and the down is 70.59. So we've been consolidating for quite some time now, 3-4 days, and of course it all depends on the bulls right now. If they want to continue towards 50% Fibonacci retracement, technical resistance at 74.37 and 75.16, or even 61% of Fibonacci retracement at 76.65. It's up to them. However, we are still in the negative territory and the bears are in control. We still are below the level of 50 on the RSI, which is the neutral level. So please keep an eye on the crude oil, because despite of this bounce, the rally might be capped. So any breakout lower means that crude oil would likely continue the down move towards again this line here. This is the midterm trend line. So it was pierced, but then the market bounced back up. But if there's any sustained breakout, that means of course the crude oil prices might go even below $60 per barrel. And last but not least, let's take a look at Bitcoin. What is Bitcoin doing? Not really a great image for all of the bulls, because as I said many times, the key to the upside is the conjunction of this golden and navy trend lines, and of course the level of 53,228. The market had been rejected from this level. Well, this level has never been touched, but never been hit. But the blue trend line has been tested from the below after the breakout. As you can see, this big pinback candle, and since then, every couple of days, bears come in. Every couple of days, bears come in. Every couple of days, bears come in. So it looks like the bears are pushing the price lower, and it's been seen before as well. As you see here, bounce, bears pushing down, bounce, bear pushing down, bounce, bear are pushing down market, bounce, bears are pushing down market, bounce, bears are pushing down market. Guess what the next pattern will be? This pattern will continue as long as there is no significant breakout. So far there isn't any significant breakout, and after a few days of a bounce, one day there's a greater bearish activity and the market is going lower. Next target for bears is the demand zone, key demand zone between 39,540 and 41,188. That's everything for me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.